Hi, this is Jack. This is my bar by bar review of Monday, December 2nd, 2024, of the ES E-mini S&P 500 futures contract. First bar of the day, big bull bar, testing the high of the range. Yesterday was a buy climax day with a sell-off, two legs down, creating a trading range at the end of the day. And here, we had a small test of the EMA, and then we rallied, broke out above the range of yesterday, the high of yesterday, and pulled back below the high. So reasonable to expect some sort of bullish buying pressure today, but top of the range, first bar of the day, definitely wait for more information. Bar 2, trader sold to close the bar 1. It's a big bar, it's an inside bar, therefore a trading range on a smaller time frame and on this time frame. So I expect more sideways, probably sellers above and buyers below. Bar 2, small tail, prominent, probably will find buyers below that low. Bar 3, pulled back and sold off, but broke out through the EMA and reversed up, broke out below the bottom of 1 and reversed up. Not what you want to see if you're a bear, but this tells you that any bull who bought up here and bought the first bar of the day is now holding a losing position. And any rally that we get up here, we will probably find sellers for that reason. So bar 3, I expect sellers above and probably more down. Bar 4, traders bought the close of 3, probably scalped out. We tested the EMA and reversed up and pulled back into the bar. Lots of overlap, we're forming a triangle. So tight trading range overall, probably more sideways. Bar 5. Trader sold the close of bar 4. Big tail on the bottom of the bar, so we'll probably find buyers not too far below this low. Look what's happened here so far. Bar 1, big bull bar, and they sold it. Bar 3, consecutive bear bars, and they bought it. Bar 4, strong bull bar, they sold it. And that tells you that today has a lot of trading range price action, and you should expect more trading range price action to come. So bar 5, strong bear bar, outside bar, weak close, probably will find buyers below this low or the 3 low or somewhere else. Bar 6, trader sold the close of 5 and scalped out. Bar 6 went down and up. It's big up, big down, big confusion, certainly a trading range. Not what you want to see if you're a bear. Could be 2 legs down overall, 1 pullback 2. Complex 2-legged move in the second leg. So bar 6, not a horrible stop entry for the bulls, but doji bar, so not a strong signal bar, and probably will find sellers somewhere around these highs. Bar 7 broke out and found sellers somewhere around those highs and reversed down. We tested the close of 4 and reversed down, but again, doji bar, and look what's happening here. We're breaking out below 5, reversed up. We broke out above 6, reverse down. So what do I think is going to happen if we break out below 7? We'll probably reverse up. Inside bar, bear bar, doji bar, breakout, pullback, sell. But again, probably find buyers down here. Reasonable stop entry for the bears, but not ideal. Both of these bars are doji bars, and the signal bar is a doji bar. So it is not a strong sell setup. Getting close to the bottom of the range, if not already at the bottom of the range. So probably we'll find buyers down here. In bar 9, identical lows with the last 2 bars, so some sort of ledge forming here, and we could begin to rally. Bar 9 is a strong bull bar, but it's entirely overlapping the other bars. And for that reason, I expect to find sellers somewhere up here and buyers somewhere down here. Overall trading range day, I think the high and low of the range is somewhere like this, so I'll go ahead and mark them. Bar 10, we broke out, found sellers above the bar, keeping with the theme today of selling strong bars and buying strong bear bars. So what do I think is going to happen if we break out below 10? We'll probably find buyers. We broke out below 10 and we found buyers. Now we have a strong bull bar. It's a strong bull reversal bar, but the problem with 11, the problem with 11 is there's nothing to reverse. We're sideways. And if this is a tight trading range, we should probably find sellers above this bar and selling at the close of this bar. But instead, we get 12. The stop entry is actually working. We're breaking out above the EMA. We're flipping the market into always in long because we're closing above a prior swing point. which is a prior channel line, and we're breaking out of the triangle. I remember watching bar 12 form and the stop entry start to work, and I was really surprised because I expected to find sellers up here. And because of that, we're probably going to go higher. Any surprise like this is likely to get a second leg up. It's a trading range day, and the range is really tight, about 10 points, give or take, maybe 15. So for that reason, it would be smart to look to buy a pullback. But reasonable stop entry for the bulls. Now we're on the long above 11, so 12 probably going higher. Pulled back on 13 and rallied, but vacuumed up to the top of the range, the close of 1. Remember what I said earlier, any bull that bought up here at the close of 1 has an opportunity now to break out, to get out, break even on their losing trade if they held all the way through this. And we also have this strong bear bar here, bar 2, so we could find sellers up here. And this is the high of the prior day. And because this is solid, I know that this is also the high of last week or possibly last month. It's some higher time frame, either a week or a month, because that's how the algorithm works. So lots of resistance up here, top of the range, probably will find sellers above this high. Deep pullback and a rally, doji bar, and then another doji bar, inside bar on 15. So the bulls are losing momentum. It could be an implied 2 or 3 legs up with a micro double top. Now with a bigger double top with 1, reasonable stop entry short for the bears. I was in Al's trading room today, and he said that this was not a strong sell setup for the bears. And I think that's because the signal bar is a doji bar. And I couldn't help but disagree because of the context. We have a micro double top at yesterday's high, last week's high, and we're near the top of the range, the top of 1, the high close of 1, and we're failing to close above any of that. And now we're starting to turn down. So to me, this is a reasonable stop entry short, but what's the problem? Bad signal bar and 11, 12, 13 needs a second leg up. And on this time frame, there hasn't been a spike break pullback yet. On a smaller time frame, we do have a couple of legs up. So reasonable to expect short here, but trading range day, you expect disappointment, you expect deep pullbacks, and you expect bad signal bars to maybe get better follow through than you think. 16 broke out below 15 and reversed up, but again, top of the range, decent stop entry for the bulls, but lots of overlap in this rally, and we're really not breaking out of anything over here. We broke out of this triangle channel, and it's reasonable to expect a pullback into the apex of the triangle, which would be somewhere around the midpoint of 11. But so far, if you're a bear and you took this stop entry, you're very disappointed with 16. But 17, gapped down, rallied for a tick, and then sold off strongly. I remember watching this bar form, and to me, it looked like everyone was just selling the entire time, and we hovered around this price level for a while. So I expected the sell-off after this to fail. But this bar, 17, is so strong, it certainly needs a second leg down. It could be a leg 1 breakout with a pullback here. So we could see a deeper pullback and then another sell-off. We're right back to the middle of the range. On trading range days, you usually get vacuumed up to the top and then spend a lot of time in the middle, vacuumed down to the bottom, then lots more time in the middle. We were just at the top, and now we're back into the middle. This is the apex of the triangle, so it's reasonable to look for a leg 2 from 11, 12, 13, but 17 is just too strong. It's not a good idea to buy yet, especially because the range is too tight. If you're buying here with a wide stop, you have bad risk reward because 1 times your risk is all the way up here at 15. And what's the probability that we get up to here before we get down to here? At this point, it's probably 50-50. So really, better to do nothing. And if anything, better to be short. 18, trader sold to close at 17, and we broke out below the prior bar. Broke out of the trading range here at 9, the small ledge that formed, but we closed above that price level. So not all that bearish. Bears are scalping out. And on a smaller time frame, this is 2 legs down in an overall trading range, and now we're near the bottom of the trading range. And to me, anytime I see a trading range, I automatically think buy low, sell high. We're near the bottom, it's time to start looking to buy. 18, big tail on the bottom of the bar. Probably find buyers below this low, but the channel down is too tight to look to buy just yet. 19 is an inside bar, a small pullback, and then we tried to sell off, but hesitating into the bar. This is a trading range bar. And for that reason, because it's trading range bar, that means technically this market cycle is complete in these 3 bars. Leg 1, pullback, leg 2, pullback, trying to get a leg 3, but instead we get a trading range. Could be a small micro double bottom, high or low, on a smaller time frame, but in any case, it's a trading range. We're near the bottom. It's time to look to buy. And for that reason, bar 20 shot up like a rocket. To me, this was a buy vacuum test of some kind of resistance. What resistance could it be? Probably the bad sell signal bar on 16 low. That's about where the close is and where the high is on this bar. Really bad signal bar for the bulls. This is not a good buy signal bar, so it's reasonable to expect a pullback. But because this bar is so big, if you're short and you're a bear, whatever sell-off you get, you're probably going to be desperate to start covering so that you take a smaller loss. Surely any bear that was holding short down here either covered during this rally or they will begin to cover in the next few bars. And for that reason, to me, this bar is flipping the market back to long. However, the problem is now we're at resistance and near the top of the range. So 21, small pullback and a rally, but doji bar. 22, good follow-through bar. Now we're channeling higher. Could be a spike and channel trend on a smaller time frame. Probably going higher, but now we're losing momentum. Bar 23, breaking out and pulling back. Trader sold the close of 22, probably bulls taking profits. We tested the EMA, broke out below it, and reversed up. So not all that bearish, but not all that bullish. We could be channeling down. Channel could be here, the low of 21 to the low of 23, something like that. But overall, this is going to need a second leg up. I think this price structure here is complete. I'm not sure that this is going to need a second leg down. I remember when this bar formed, I did think that this did need a second leg down. Looking at it now, I can see 1, 2, 3 legs down and a new market cycle forming here. This could be a channel or it could be a trading range by now. And if so, if this is a trading range on a smaller time frame, this would be the low and the highs would be somewhere up here. So reasonable to expect buyers below this low or even buyers at the close of that bar. Small pullback and then a rally, 24 inside bar, and then 25 breaking out, but doji bar. So not a lot of conviction for the bulls. But what do you notice here? We're starting to trend up. We're consolidating above the EMA. We have a small pullback here, and we're trying to get a second leg up now. But every time we get close to yesterday's high, we find sellers. What do I think is going to happen up here? We're probably going to find sellers. But not enough reason to sell yet. Yes, probably sellers somewhere up here, but the top of the range could be much higher than you think. So 24, probably buyers below, and 25 breaking out above yesterday's high, above last week's high, and heading for the top of the trading range here, bar 1. Reasonable to think of today as a bull channel at this point, possibly something like this. But it's a trading range today so far with a really tight range. The range could double, but then again, it could just stay small because we had a large buy climax day in this trading range. So far, it's been quite disappointing, so I expect it to continue to be disappointing. So 25, probably buyers below. 27, trying to break out of the trading range, but having a hard time. Pulled back into the range, probably going higher. Second leg up from 20. So we may find profit taking above that high. Big tail. 28, strong bar. Probably will track profit taking. Could be going higher. We're breaking out of the trading range, but we need to get follow through. This is the breakout bar, not 27, because 27 did not close above the high of 1. So this is the breakout bar, and now we need follow through. And look at the follow through. We broke out above and reversed down, outside down, 29. Probably more sellers up here, and probably reasonable to start thinking about shorting if it is a trading range day. If you're thinking today is a bull trend day, there's some evidence to support that theory, but you can't ignore it's 2 legs up and we're starting to turn down near the top of the range. If you just say those words out loud, you think, oh yeah, I mean, that's kind of what we're starting to do right here. Now 30 broke out below 29 and reversed up. but it closed exactly at the high of 1. So not good for the bulls. We need more momentum up. That's better. 31, breaking out above 30. Reasonable stop entry for the bulls, but the problem is it's a trading range day so far. We could be forming a bull trend day. We do have an open gap, at least an open body gap between 29 and 23. And we even have an open body gap between the body of 14 and the body of 29. But the tails are overlapping and these body gaps are not that strong. So good follow through for the bulls. Pullback rally, doji bar, 32, channeling higher. But again, top of the range, and now we're in leg 3. 33, inside bar, starting to go sideways. It's a 4-bar bull micro channel, so possibly buyers below. But again, top of the range, breakout of a trading range on a trading range day, and it's leg 3. 34, another inside bar, bear bar. If you're a bull, you got to start, you probably have to be thinking that this could start to fail. We could start to roll over. But if we do start to roll over, we do have a lot of support here. The low of 30, the low of 23, the gap between 23 and 29. But leg 3, top of the range, reasonable to think about a reversal or at least get out of your longs below that bar. Bar 35, breaking out, reversing up, could be a micro double top with 32, and then 36, bear breakout, getting back into the trading range, failing above the high of 1, testing the high of the prior day and the high of last week. The bulls probably want a double bottom with 30, buyers below, and the bears want to break out to test lower down into the middle of the range. Buyers below 36, reversed up, tested the open or the high of 1 and pulled back a little bit. Not ideal stop entry for the bulls. If this is a tight trading range, probably sellers above this bar. You could argue bull channel, but now 36 is a strong bar, and this is changing the character of the market. Bad follow through for the bulls on 38, small bear doji bar. Better follow through 39, but it could be 2 legs up in an overall trading range, and we could get a second leg down from 36. Follow through from 39, but doji bar, inside bar, doji bar, and then 42, micro double top with 40, and breaking out this time back below the high of 1 and below the EMA. Sorry about that. Not sure what happened there. Where was I? I think it was right there. So 42 could be a second leg down from 36, but it's a tight trading range, and so far the day is mostly bullish, so probably buyers not far below the low of 37. Buyers below 42, reversing back up, bull reversal bar, but not much to reverse. Overall tight trading range, and for that reason we found sellers above on 44. Reasonable stop entry short for the bears, but look at what happens every time we have a reasonable stop entry for the bears. Bad follow through 43, bad follow through 37, bad follow through 30, bad follow through 24. What do you think is going to happen here? Probably inevitably bad follow through. So 45, small bull reversal bar, but probably not enough to reverse this bear channel. 46, breaking out below 45, traders sold to close. Traders bought to close 46 and 47, breaking out. Couldn't have a double bottom or triple bottom with 37, 43, 46. Bad buy signal bar for the bulls, so possibly sellers up here, possibly a double top with 41 or 35. So if you're trading up here, you better be quick to get out, and you got to be trading small. Bad follow through 48, probably going a little bit lower, probably sellers above, but then again, probably buyers below. Reasonable stop entry for the bears. It triggered. It worked. Not sure if they got 1R. Looks like they did get 1R. So if you're a bull and you see a bear stop entry trigger, and the bears were able to get an uninterrupted 1R target in 1 bar, do you really want to be holding long? So for that reason, probably sellers above. Bull reversal bar 50. But again, reversal of what? We've been sideways for about the last 15 bars or so, really for the last 20 bars or so. So probably sellers above, 51, sellers above. Decent stop entry short for the bears, but tight trading range, small range, probably buyers below. 52, buyers below. We're just alternating between bear, bull, bear, bull, bear, bull. So what do I think is going to be next? Probably a bear bar. Doji bar, not a bear bar, inside bar. 54, bull bar, channeling higher, holding at the EMA, holding the high of yesterday as support, the high of last week as support so far. But really not ideal for the bulls. We're just kind of going sideways and drifting higher. So probably sellers above any of these highs and probably buyers below any of these lows. 55, trying to get the breakout, bad follow through. 56, give up bar on 57, a little bit characteristically different than everything to the left. However, it could just simply be leg one, pull back, leg two. So it could be buyers below, reasonable to look for a pullback to sell. It's a strong bar. I'm not sure how it formed. I wasn't watching the market at this point, but reasonable to look to sell a pullback. 58 pullback, doji bar, broke out below and reversed up. Not ideal for the bears, probably sellers above, buyers below. Micro double bottom, 59 and 58. Bull reversal bar, trying to reverse this sell-off, but the sell-off may be too tight. 60, deep pullback and then a rally, climactic bar. Each body is getting bigger, each bar getting bigger. So it could be like one pullback, like two, or excuse me, like one pullback, like two, pullback, like three. Could find sellers above this bar. Instead, we rallied. But again, climactic. Not ideal for the bulls, but good for the bulls. Testing again the top of the range, failing to close above, probably going higher, probably buyers below. Not what you want to see, possibly sellers below. Micro double top with 61, testing the high of the trading range. I'm going to go ahead and get rid of that line and get rid of this line. 63, channeling higher. It's 5 or 6 bar bull micro channel, but lots of overlap. It looks kind of weak. Top of the range, could find sellers up here. Probably buyers below, but where? Probably the bottom of the range. Not ideal. 64 broke out below and reversed up. Micro double top. Bull bar. Again, micro double top with 63. Possibly sellers up here. So far, too bullish to look to sell. Probably look to buy below these bars. 66, bull breakout bar. This time trying to break out of this tight trading range here. But now we're facing resistance, the high of 32. Traders sold to close on 67, with bad follow through 68. Mostly sideways, probably buyers below. However, if you're a bull and you're holding up here, you may look to take profits if we don't start to rally. 69 started to rally, but big tail. And then 70, breaking out again, big tail. Inside bar, 71, 72. That's 3 legs up. 1, pause, 2, pause, 3. Or you could see it as 1, 2, 3. Or even a smaller micro parabolic wedge, 69, 70, 72. But probably going higher. Lots of bars up. Could be a bull channel. If it is a bull channel, where are the channel lines? Probably something like this. 73, inside bar, bear bar, may find sellers above, breaking out below, but reversing up, probably buyers below. Looks like a give up bar on 75, breaking out below the EMA, testing the high of the prior day and reversing up, probably a pullback and then another sell-off, but instead micro double bottom, reversing up. 76, sellers above, buyers below. 78, and then a small rally into the close, and that's the day. So overall, a very tight trading range day. Would have been a good idea to set your scaling much bigger than usual because the range was so tight. And then when you're looking at the market like this, it's a little bit easier to see the strength. You know, if we start over, big bar, big risk, big bar, big up, big down, breakout, so strong bears, but not a lot of conviction. Strong bulls, but not a lot of conviction. Traders selling the closes of strong bars, so probably buyers below. Deep pullback. If you did buy below, stop down below 45. You're holding a profitable trade. Probably scalped out. You know, a little bit easier to assess the strength and also see how climactic the bars are. This bar is bigger than that. This is bigger than that with a deep pullback. So it's 3 legs up, top of the range. You know, reasonable to look for a reversal down. Overall, pretty tricky day, pretty trappy day. I didn't trade today. I'm still working on getting my multi-chart set up. I was using Interactive Brokers, and the charts are just total shit, as well as the data being total shit. It's snapshot data. So with multi-charts, I can use IQ Feed, which is tick-by-tick data, much higher quality data directly from the CME, unfiltered. It's a DTN network. And I can also use my Interactive Brokers account to place orders with, and I can use better data. And I like multi-charts better than TradeStation because TradeStation is 32-bit and multi-charts is 64-bit, so it functions a lot better, like TradingView. TradingView is just much more seamless charting, and with TradeStation, you know, it's really good. I like TradeStation a lot. And but anyway, I digress. Overall, tight trading range day. You could look at it as a bull channel, but you know, really just a significant amount of trading range price action. We have a big leg up here, sideways, a couple legs down here, and then a big second leg up. So interesting day overall. Really tough, you know, really tough to read these bars like this, pulling back like this. I really don't do very well with rallies and trading ranges. You know, like here, 27, not ideal. You know, here, breakout, pullback, 38, really not ideal. Breakout, pullback, 48, probably buyers below, but then, you know, just shakes you up. 50, reversal, but not really reversing anything, so sellers above. And lots of overlap in this rally up here, so it makes sense to look for a pullback and a sell-off. A couple micro double bottoms here. Interesting to see what that looks like on a smaller time frame. I guess not that interesting, just lots of overlap, lots of chaos. Here, triple bottom on a line chart. So on a line chart, it's a triple bottom. It's really clear here. And on a candle chart, not as clear, but double bottom, pullback, then a rally. So interesting. It's good to look at different time frames to see how everything behaves and see how it looks. One of my favorite things to do. Here, parabolic wedge, 1, pause, 2, pause, 3, micro double bottom, down on 18, up, down on this bar, and then up. So reasonable stop entry, but look at this tail. I mean, really not ideal, but it is a buy signal bar closing above the midpoint. But I guess you could argue it's a better signal bar than this doji bar, 18, which is probably why we found sellers above that high. Let's look at the 1 minute chart earlier in the day. Is this today? Yes. Here's that strong micro channel that led to a sell-off at the top of the range here. This is exactly what we saw at the end of the day. Look at this. Look at all the overlap. Yes, it's a tight channel up. A small pullback bull trend on a smaller time frame. That would be really interesting to look at on maybe like a, let's see, we're on a 1 minute chart. Let's go to a 10-second chart. Might take a minute for this to load, but what I want to look at, that small pullback bull trend. Yeah, look at that. It's pretty good. Not bad. So what happened here? Well, we had a parabolic wedge, 1, 2, 3, strong trend line break, a higher low, major trend reversal, micro double bottom, breakout. This is actually too many bars, but just look what happened here. You know, we broke out above the EMA. Look at the EMA. Support. Broke out below, reversed up, strong reversal up, micro double bottom. Down, up, down, up, down, up. It's a triple or quadruple bottom. Everyone's familiar with those quadruple bottoms. Look at the EMA, support. Boom, rallied. And look at the gaps. Gap between these bodies and these bodies. Gap between these bodies and that body. Gap between this body and these bodies. This bear bar and these bear bars. So we're forming gaps. This is a small pullback bull trend. And then climactic sell-off here, probably a trading range now. Top of the range here. Double top, sold off. This is an I1 arm, deep pullback. And then a second leg down. Second leg is made of a couple of legs itself. Then a rally, test of the highs, going a little bit higher. But look at what happened at the EMA. Every time we got to the EMA, we reversed up. Broke out below, but quick reversal up. Broke out below and reversal up. Probably find profit taking above these highs. Went a little bit higher. Got a gap between that body and that body. Another gap here. Micro double bottom. Down, up at the EMA. Not ideal for the entry bar, but a quick scalp. I mean, if you're a computer and you can scalp a 10-second chart. Deep pullback. Testing the EMA from the downside now. Probably looking short. But instead we get a strong rally. And then higher high, major trend reversal. Tight trading range, final flag, breakout. Big sell-off. Consecutive bear bars, always in short, clearly. Probably a pullback with a test of this low or these lows. Broke above those lows. And we just continue to rally. I thought there was a sell-off somewhere after that. Yeah, here it is. It's just too many bars. Now look at the sell-off. Same thing in the opposite direction. Open gap here, here, here. Tight trading range here could be a final flag. So you expect buyers below these lows. Double bottoms. Breakout. New market cycle here. Gap, gap, gap. Gaps. Big gap. Tight trading range could be a final flag. Small pullback bear trend. Micro double bottom. Trend line break. Higher low. Major trend reversal here. Breaking out to the upside. Anyway, fun to look at. Interesting. It's all implied here. You can see all of that on the 5-minute chart. Pretty difficult to see it, but it's there. You know, parabolic wedge, 1, pullback 2, pullback 3, bull breakout, higher low, major trend reversal, spike, pullback channel, big sell-off, tested the highs, spike, pullback channel here. Tight trading range overall, but lots going on. So interesting day, crappy day, difficult day, and thanks for watching.